Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we've been talking a lot about the relationship between home prices and mortgage rates.
Mm-hmm.
And there is this theory on the internet that makes absolutely no sense, that it's like a teeter-totter. If mortgage rates go up, then home prices are forced to fall. However, when you look at the entire spectrum of the real estate market, there's zero correlation. It's never happened.
Right.
Actually, we have data that we're going to show on another video that shows the opposite.
Mm-hmm.
It shows as mortgage rates go up, prices go up. We're going to show that, okay? Completely different video. You're probably saying, oh, that can't be right. Okay, so what we did is in prep, we were preparing for a different video, and then we found this data. We decided to scrap the other video. The other video was one of these goofy, what's the best time of year to sell? And it was like March 16th to the 24th or something, right?
So apparently, according to Realtor.com, so you're getting a bonus. According to Realtor.com, the best week of the year to put your house on the market, actually, be very specific, they said that the best week for you to put your house on the market is April 16th through the 22nd, 2023. And one of the reasons they gave for that was because that is the week when you will get more eyeballs on your house.
Yep.
So
16.4% more buyers viewing, 48,000 higher asking price than the beginning of the year. That's the peak of the thing.
Right. Which, of course, that number as far as how much more in the asking price is absurd because, if your house is selling for $200,000, you're not going to get $40,000 more. And if your house is selling for $5 million, obviously that 40,000 could happen, but there's something in between.
Okay.
But it was just interesting, and we thought it was a fun thing to talk about. But we'll get on to the really good video that we have for you today.
Okay. So what we have talked about, and we actually this chart, and there's a couple charts, because it talks about historical and then talks about moving forward, which is what you guys all want to know. Okay. We did find something that is the most highly correlated thing to home prices. It is the number one thing that is the signal. Everything else is noise.
Right. So the thing that we want to point out is we did not create this chart.
Not our chart.
Okay, not our chart. Not our data.
Nope.
We are passing on information.
Okay. Here is the chart. The red line is inventory, active listings, active in the MLS. This is for the entire country. If you look at the top there, that's 1.5 million. That's, the 1 million to 1.5 million is the normal level of listings available to purchase at any time in the U.S., right? At the peak, it went, maybe 10 years ago, it was closer to 2 million, but it's been going down because home builders we've been having this sucking effect of not enough of household formations being greater than the number of homes being built, right? So they're just, all this inventory is being eaten up, and then investors, you all know about that. But if you notice something interesting, when you see 2020, which is kind of right in the middle of the chart, what happened, look at the blue line for median list price, and then look at the red line for inventory. What do you notice? You notice that as inventory basically started disappearing, that prices started going up. And what's really interesting is you can see the seasonal effects of up and down, up and down. This happens every year. Home prices don't just go up all the time. They go up in the spring and they draw back in the fall, couple percent, 2 to 4% every year. Everybody's been freaking out about oh my God, look at the drop in prices. It's the crash. You could have said that every single year because it happens. But then when you look what's happening. Prices going back up again. And look what's happening in inventory. Literally, if the blue line is going down, the red line is going up. And if the inventory is the thing, right, Juana?
Right.
It's literally the thing.
Look, we have a market economy, so it's about supply and demand. If we have very little supply and we have a good bit of demand, or we have outsized demand, then we're going to have either increased pricing or at least stable pricing.
Yes, interest rates affect affordability.
They do affect affordability. However, they do not affect demand as much as you might think, because we've talked about this, people have to live somewhere. So, and particularly in an environment like we have right now, where we don't have a lot of inventory, the fact that interest rates are high People have kind of adapted to that, and people are out buying houses. It's springtime and they're buying houses. You know, we said that people would adapt and people would still buy houses in the spring, and they are. We're seeing lots of buyers out there, and they're looking hard, and what they're finding is not a lot to choose from.
To the people who believe there's a looming foreclosure crisis, there's literally none. We've done numerous videos on this. There are no foreclosures. Mm-hmm. There have not been foreclosures in large numbers in over 6 years. Mm-hmm. So there is not like there's a bunch of foreclosed homes waiting for a perfect time to come on the market. That hasn't happened. The banks aren't foreclosing because we look at the pre-foreclosure numbers every month. They're dismal. There's literally no foreclosures. People.
Right. Well, and then the other thing, keep in mind, the banks have learned their lesson about foreclosing. Foreclosing is a last resort. It's when they can't work anything else out. So it's not profitable for them to foreclose. It is expensive. They have a lot of upfront costs. So what they will do is they will do their best to work with the borrower for a resolution. That resolution may be a loan modification. It may be the sale of the property, but a foreclosure is a last resort. A foreclosure what happens when a property is abandoned. A foreclosure is what happens when there are title issues and the heirs can't resolve those title issues. So foreclosures happen with unusual circumstances. They do not happen just because somebody isn't able to make mortgage payments.
The days of most buyers needing the entire loan amount to purchase a home, like get a loan for the whole amount, are gone. People are buying 40% cash. The people getting loans, 90% of them are putting 20% down. There is a very small number of people, and I keep hearing as a matter of fact, we had somebody made a comment on the thing that, well, those people who bought in 2020 are all getting it foreclosed now that interest rates are 7.5%. People out in 2020 are paying less than 3%.
They're not getting foreclosed and they're not letting go of those mortgages, which is part of the reason why we don't have inventory, is because people with mortgages below 3%, below 4% are hanging on to them because those mortgage payments are lower than a rent payment would be.
Okay, so here to the people who don't really understand, have never bought a house or time. When you buy a house and you get a loan, that percentage is fixed forever. So if your payment is $1,157, it literally never changes for 30 years. Mm-hmm. So 30 years from now, you'll still pay $1,157. You'll pay the same amount. It's a fixed, because it's the loan, the money lent to you is on a fixed rate. It doesn't change as interest rate change. It's not like your car loan. A lot of people, they think that when they buy a house, it's like a credit card. It's not that it's fixed. It can't be. If it was adjustable, it'd be a mess. Right? It would be an absolute mess.
There are adjustable loans out there, but there are very few. Most of the market has fixed rate loans.
And the reason why no one gets adjustable rate loans is the spread used to be pretty big, but now it's zero, basically. I remember at one point, the bottom of that market, the fixed rate average was 2.75 and the 1 year ARM was 2.67. Why would you even, for that minuscule amount, like a 1/12 of a percent, why would you not just lock in that 2.75%? Okay.
Plus, people are risk averse. So that's a lot of the reason why most people have fixed rate loans. They want to be able to control their housing cost for the long term, and that's part of the point of home ownership, is controlling your housing costs for the long term. So that's another reason for the fixed rate loans.
Okay, the next chart, we're going to talk more about some macro stuff, because I feel like there's people who watch the video with preconceived notions about what's happening, and the stuff. I get what you're saying. If it did happen, if it was true, then that might do something, but none of the things that anybody said in the comments are actual things. Okay. So here's one, this is weekly list price, first beginning of year. So this shows the trend. Now, that purple line was 2022, the hottest year ever. If you look at all these years, you can see that list prices tend to rise through the first half of the year, then they fall. They do this every single year. Well, guess what? 2023 is in there. It's this sort of pink colored line, peach colored. And if you look all the way over to the left, and you can see it's doing exactly what it does every year. It's going up. List prices are going up. They're not falling. They haven't fallen in the last 5 years from the first of the year on. It's a normal year. The home prices are still falling. It's a crash. Is literally not happening just because the neighborhood you live in is, this aggregate number means all of the things. So you can't just pick the 1 or 2 or 3 markets or a specific neighborhood. We did a video where we showed all of Vegas, and there were some little zip codes and areas that were going down like 3 or 4%, and some going up 10%. So the anecdotal information, we appreciate it, but this is showing that the whole of real estate, which means all the people in the country are subject to the same interest rates, are acting as they normally would, despite the highest interest rates we've seen in a decade, maybe 15 years. Home prices are going up. Weekly list price beginning of the year is tracking right along. And just because it's not doing what it did in 2022, but Todd, in 2022, prices went up 13% the first 4 months. They're only up 4%. That's a crash. Right? You can't, I guarantee you there'll be 20 years from now, people still comparing whatever the real estate market's doing to the 2022. And, it didn't go up by 18%, in that year.
Well, so these numbers that we're looking at are national numbers. So looking at outliers doesn't give you a clear picture of what's happening in the market. What we're looking at is a much more comprehensive picture of what's happening in the market.
Okay, this next slide, weekly views versus listing. This is online views. This is based from Realtor.com, people looking at homes. As you can see, most people actually are looking through the first part of the year, and it trails off later in the year. This is online, looking online. This is sort of a leading indicator. 2019, you had a weird spike there where people all of a sudden were looking later in the year. But as you can see, that 2023 is that little peach color, and it's tracking right in there with the other ones. It's not like less people are looking. Actually, there's more people looking than there were in the beginning of January online. What does that mean, Wanda?
It's springtime. I know I keep kind of beating this, but it is. It's springtime and people are looking. They need to get themselves situated before summer vacation, before the kids go back to school in the fall, all these things. This is the spring buying season. Once we get into May, this is going to slow down. Once we get into June, it'll slow down even more, and it'll continue to slow down through the fall. The slowest months are going to be October, November, December, January, and then we do it all over again.
Okay, this next one is weekly active listings versus beginning of year. This is for the last 5 years. Now, that purple line up on the top was 2022 because the number of listings in the summer and fall increased dramatically compared to normal years. But what do you notice about 2023? It looks like it's tracking along with all the other ones. It's tracking along a normal thing. The number of listings are declining, which they will do until about week 16, 17, 18 in there. And they'll likely start increasing again. Will they do what they did in 2022? Who knows? But here's one thing. That was mostly interest rates. It was very short term, and it is in the past. It is highly likely that our future for interest rates are much lower than the past of interest rates are.
Right. I mean, look, for the rest of this, certainly for the next 6 months, we're not looking at a substantial change in interest rates. We're looking, especially with all the banking excitement that we've had over the last couple of weeks, I think the Fed's going to be much more cautious with increase in interest rates. But the Fed will still keep a very close eye on inflation, and the Fed will still increase interest rates. That's not really debatable at this point. How much? That's probably more debatable. But we also know that very likely in the fourth quarter, interest rates will probably moderate, and that might give a little more incentive to the fall buyers. It'll be interesting to see.
There are no foreclosures. There are none. They're not happening. There's no boom of home builder fallouts that are hitting the market. Somebody commented about the KB home fallouts from the fourth quarter. They've either been sold or they're currently in the MLS. They're not still sitting there with KB Homes going, what should we do with these empty houses? Should we sell them or should we just let them sit empty? They were either sold already They even said in the article that the fallouts, that like 80-something% of them had gone back under contract with a different buyer.
Right.
Only about 37% of them actually had price reduction. All the rest that didn't sell were put in the MLS. They're included in the data nationwide, right? Mm-hmm. There's no major things happening. Could a recession force people to sell? There's somebody had made a comment in the comments. Yeah, but if they lose their job, they're forced to sell because they have to get the money out of their house so they can go pay rent. Now, I want to make an urgent plea to all of you watching this. If you lose your job and you own a house and you have a really, really low payment and a really, really low interest rate, please think twice before you sell the house so that you can become a lifelong renter again, because you're never going to get that interest rate again. You're never going to get that low payment again. And you're going to burn through all that money feeding somebody else's investment property. We are probably the worst real estate agents ever telling you not to sell your house. Like, if you sell your house and you list it with us, we make money. We're telling you to think about it. Wanda, what's your opinion on that? I think most people would say, like, I'm never selling this house. I'll get a home equity loan. I'll get credit. I'll go borrow money from a friend, but I'm not going to sell the house just because I lost my job. And maybe it's going to take me 3, 4, 5, 6 weeks, whatever, to get another job, right? Go work at Home Depot. You can make $1,100 a month to make that mortgage payment. Do not give up the mortgage.
Right. So
if you want to do that, if you have a sub 3% mortgage and you have like a payment that's under $1,500
mm-hmm.
and you want to get rid of the house, let us know. We'll see if we can assume your loan.
That's right.
We might assume your loan we might do that. Mm-hmm. Then you won't have to. We'll take the loan. I would like to have that loan.
That's right. Look, people do sometimes have to sell their home because they're relocating from one state to another and they need the money so they can go buy another house, whatever. And that's totally fine. And we're not saying that if you choose to sell your home, that's a bad thing to do. Everybody's situation is unique. And we support whatever it is that you want to do. We're just simply saying that it makes more sense to have a lower fixed monthly expense for housing than a higher one. And it makes more sense for you to own a house versus paying somebody else's mortgage payment. That's all we're saying.
Okay, I'm going to put this last chart up, this chart we did, the first one, up again. And I want to ask everyone a question. Let's pretend I blanked your mind and made you forget about the damned mortgage rates. And I whisked you back in time to 2019 or 2020 or whatever. And I showed you this chart and said, this is what home prices are going to do for the next 4 years, 3 years. And this is what inventory is going to do for the next few years. What does this chart tell you about what's going on with interest rates? I'll bet every one of you, every single one would say, well, home prices are really going up pretty strong, a little more than they were before. And inventory is going away, so something's causing people to buy more homes. I'll bet interest rates are really tanking in the future. You would, and if you said, oh, well, what if I told you interest rates were like in the 6s? You would say, oh, why would it do this if interest rates are in the 6s? That's exactly our point. If interest rates are going to cause the crash, why is this happening? You were told less than a year ago, for the last 3 years, that inventory would rise to the highest level ever, more so than 2008, which was way more than it was in 2017, which you can see on here. We're like half of that, right? And home prices are going up again. Why is this happening if the mortgage rates are going to cause this to happen? It doesn't make any sense. And actually, there's a reason it doesn't make sense, because it's really not a factor. The factor is prices are affected by inventory, supply, demand. You have a supply curve, you have a demand curve. And that's literally this is what this is. This is a supply and demand curve.
Right. So that's what happens when you've got lots of demand, not enough supply. And it's not that the house, and I know you're going to say, well, but the house down the street has been on the market for 90 days, 100 days, whatever. And so I would have two things to say about that. Number one, what does the product look like? What does the house look like? Is it a house that's kind of homely and no one wants it? That might be the reason why it's still on the market. Or two, is the house poorly priced? So if you've got a house that is that's a beer house and it's priced at champagne prices, that's a disconnect. So if you've got a disconnect on the price, if the house is homely, that's the reason why that house is still on the market 100 days later. A house that is in good condition, that is attractive to buyers, and that is priced correctly will sell. And that goes for most things, but particularly houses in an environment where we don't have enough inventory.
What's even scarier is if you take this chart and realize how many homes are probably overpriced sitting on the market not selling and take them out of here. There's very few actual number of reasonable transactable homes, which is why the number of sales are so down. Mm-hmm. The number of sales, low sales does not crash the market. The low sales is an indicator of low supply of homes. This is, I think, the best visual proof that shows, because you cannot tell me, because remember, interest rates spiked in 2019. Remember that? They went up. The Fed, we thought we were going into a recession, so they jacked up the interest rates. And then all of a sudden it says, no, everything's good. And then they dropped interest rates back to zero again. And that for the COVID, when the COVID hit, they dropped them back up. But remember, the federal funds rate was up to like 1.75. It had gone up from 0 to 1.75. And then it went back down to 0.
Right. So this is our story for today. What do you think? Did you like the graphs? Did it help you understand what's going on in the marketplace? Please like the video, hit the notification bell, subscribe, share the video, leave us comments, and we'll see you on the next video. Bye.
Bye.